Okay, in this video we're actually going to perform some calculations related to taxation. So assume that Richard is someone who is earning $1,050 per week. And we're also going to assume that he is working 52 weeks per year, so that's all year round. Now during the year he has receipts for $375 for work-related expenses. So this is going to be a keyword here in this problem. Now the question has three parts. The first one is to calculate his taxable income. Then we're going to calculate his tax payable, so how much tax he is going to pay based on that income. And then question C says that there's also an extra tax that corresponds to something called a Medicare levy of 1.5%. And then we need to calculate the total tax from that. So Medicare is just essentially just the healthcare that we have in Australia, and a levy basically means that this is kind of like an extra tax that is not included in this little table here, but it is necessary to pay it because it is a service that everyone needs. So in order to make sure that it is being funded properly, we need to pay that extra amount. So at this point what we're going to do is, first of all, we're going to start with part A. So we need to calculate his taxable income. So taxable income means how much of his total income is actually taxable. So first of all, we need to know, okay, so he's working 52 weeks. So his salary or his total income throughout the year is going to be equal to 52 times $1,050. Okay? So let's just put that in our calculators. And that comes down to $54,600. So that would be his total income for the whole year. Now, there's a keyword here that is work-related expenses. So basically this means that this was already included into his pay, but he had to spend it. Let's say he had to spend it in because of transportation, or it was some kind of equipment that he needed to buy that was related to his work. Now, anything that is work related and that is an out-of-pocket expense can usually be obtained back from the taxation office, and we call that a deduction. So a tax deduction is essentially something that you paid for, but because it was related to your work, then the government can actually return that money to you at the end of the year, actually the financial year, which ends in July. And because obviously it was something that was not supposed to be spent by you, but you needed it for your work. And so there are certain things that you can often claim for tax deduction, so long as they're related to something that you actually really need. So in this case, the total deduction for the year is just $375. What that means is that the government cannot really tax you for this because you needed this for your work. So the taxable income is simply going to be the salary minus the deduction. So essentially this does not count as part of your taxable income. So in this case, we're going to subtract this from that. So 54,600 minus 375. And that's going to come down to $54,225. So this is what the tax is going to apply to. So now we go to question B, and we're asked to calculate his tax payable. So tax payable is the amount of tax that he needs to pay corresponding to his total taxable income. So we're going to grab this number and we're going to go to this chart over here so we can clearly see that he would fall within this range here. And basically what this is telling us is that the total tax is going to be this. So let's just write it as tax. We have a fixed amount to pay. That's $3,572. And we're going to have to add to that 32.5 cents for each $1 that is over $37,000. So 32.5 cents that essentially of $1 for each dollar means 32.5%. So we need to convert that to decimals, so 0.325. And now we're going to multiply that by basically the amount that is over 37,000. In this case, all we need to do is we need to subtract 37,000 from his taxable income minus 37,000 like this. And now all we need to do with that is just put it in the calculator and see what that comes down to. So 3,572 plus 0.325, and then we have 54,225 minus 37,000, and that's going to be 9,170.13. So this is the total amount of tax that Richard would have to pay in order to meet the requirements of the Australian Taxation Office. Now, if you compare the figures, I mean, this is the total income. He spent this much, so it seems like it's a very large proportion. But, you know, at the end of the day, this is paying for a lot of things like healthcare and education and all that. So I guess it's kind of a trade-off. It's services that you definitely need in your life. So it's not too bad. It could be worse. There are countries where you have to pay a lot of tax. I think Denmark has to pay like 50% tax or something. So it could be worse. Now, question C tells you the following. So there's an extra tax, which corresponds to the healthcare, Medicare, and it is of 1.5%. Now, calculate the total tax. So we already know what the tax that corresponds to his taxable income is, but we have now to include this extra one. So in order to do that, what we're going to do is we're going to get the taxable income, and we're going to get 1.5% of that. So basically, we're going to divide this by 100%, cancel out the 2% signs, and we're going to multiply that by the taxable income, which is 54,225, and then that's going to be the following. So we have 1.5 or 100, 54,225, and that's going to be $813.38. So now that's only the tax coming from that Medicare levy, but remember that the total tax we originally calculated was this. So now the new total tax is going to be this plus that. So we're going to have 9,170.13. So the new total amount is going to be $9,983.51. So that is how much tax he would have to pay under these conditions that we just outlined here. Now, how about what if we wanted to know how much, what the percentage of his total salary he's actually paying in tax? So we're going to take the taxable income, and we're actually going to grab the tax. So we're going to represent this as a proportion of his total taxable income. So doing it this way would actually give us a decimal, but we want it in percentage, so we're going to multiply this by 100%. And now we're simply going to divide that to get the following. So that's going to come down to around 18.4%. So basically, about 18.4% of his income is going to be deducted in taxes. So, you know, it is not too bad, because if he was earning anything closer to $87, it would definitely be larger than 20%. But at least in this case, we can see, you know, he's going to lose some money, but at least he's going to have some left. So it's not going to be too bad. We can still calculate, I mean, if this is the total income he's getting, then his net income So remember that we refer to this as the gross income, but the net income is whatever you have left after all taxes have been deducted from your total income. So in this case, we're just going to have this minus the total amount. So that's going to be 54,225 minus 9,983.51. So he's going to have about $44,241.50 left, which should be enough to cover accommodation and any other expenses he may have throughout the year, and still save some money for leisure or traveling or whatever. So this is basically how you would calculate all those different things. So I guess the one thing to take home with this kind of problem is to really what you need to look at is you need to look at the actual table that is going to tell you that information. You can find this on the Australian Taxation Office website. And then from that, well, you just kind of have to estimate. You can never be sure exactly how much money you're going to make during the year unless the company you work for actually gives you a fixed salary. And then from that, you can easily calculate it just following this. So it shouldn't really be that bad after all. And I think it's better to do that from the beginning so that you have a more realistic idea as to how much money you're actually making. Because a lot of people think, oh, I'm going to be making this amount of money, but then they forget to account for the taxes that come with that. So obviously, you're not going to be making this amount of money. This is how much money you're going to have to spend. So I guess that's an important distinction that we need to make if we want to be prepared for when we actually get a job and so on.